Joe, good to see you. How you doing? How you been? Paolo, good to see you as well, brother. How you doing? Stormy, good to see you as well. How you doing? Pure, good to see you as well. Evening. How you doing? Let's go. Do, good to see you as well. How you doing? Evening, Miles, good to see you as well. Artistic. How you doing? Comatose, good to see you as well, brother. How you doing? Good evening, Miles and CMF. Good to see you as well. Free Forever. How you doing? What up, Miles and CMF? Ray, good to see you as well, brother. How you doing? Morning, Miles and CMF. Shady, good to see you as well. How you doing? Hello, Miles and CMF. John, good to see you as well, brother. How you doing? Hello, everyone. LJ, good to see you as well. How you doing? Good evening, Miles and CMF. Manny, good to see you as well. How you doing? Good evening, Miles and family. Orphan, good to see you as well. How you doing? Let's go. Everyone's tuning on by one. Okay. Let's do intro disclaimer about that time everyone's tuning in for the first part of the live. Hi, Miles. T, good to see you as well. How you doing, T? How you doing? How you been? Now, welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulation. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. So if you ever want to have a better understanding of what's happening around the world in terms of those topics, tune into this live Monday, Friday, 10 p.m. London time onwards. This is episode 353 of the CMF Live right now. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And we do Q&As on this live as well, which means if you ever do have any questions, put it down in the comment section. I'm more than happy to help you out. Just want to take a quick second just to say thank you so much to everybody from the CMF right now who is watching this on X, who has liked and retweeted this live. So far, we have 12 likes and 2 retweets. If CMF members, if you haven't retweeted this live and just liked it, please retweet the live. Also, if you've liked, thank you so much. Also, if you're watching us on YouTube, thank you so much to everybody who's also liked the live as well. If you haven't, just drop a quick like as well. Now, on tonight's live, we're going to talk about Trump news. We're going to talk about the Fed. We're going to talk about the CPI data reports, some perspective news, new countries that are essentially bringing in legislations, even the SEC bringing legislations, and are we going to get rate cuts? And obviously, as always, Ripple news to go through as well on tonight's live. So, before we go through the first news on tonight's live, which is regarding Trump considering actually suing, apparently Jerome Powell. Before we go through that, let's consider the comment section first. Let's see what's going on there, and then we'll go straight into the next news. Hi, Miles and CMF family. Hope everyone is good. Ronnie, good to see you as well, brother. How you doing? It's been a long time, Ronnie. How you been? Good evening, Professor Miles and the rest of the family. Let's go funky. How you doing? Good evening, Miles and family. Ian, good to see you as well. How you doing? Markets are pumping, as you said yesterday. Let's go funky. Miles with his crystal ball. Let's go. Go, Miles, go. Let's go funky. 9 retweets. There's 9 retweets. Oh, on my screen, for some reason, it's showing 2 retweets. Probably it's just lagging behind. Thank you so much for that, though. Honestly, thank you so much to everyone who has already liked and retweeted this live on X. Now, the first news we're going to go from tonight's live is regarding Trump. Apparently, Trump is actually considering suing Jerome Powell. So here it is. President Trump has publicly considered permitting essentially a lawsuit against the Federal Reserve Chair Jerome Powell over his Fed renovation costs that was posted on Truth Social. So everybody saw the video of Trump going essentially standing next to Jerome Powell in the building that they're essentially building, and essentially the funds that were mismanaged and the buildings costing too much. It's a humongous project for no apparent reason. Now, Trump is actually considering suing in some sort of way, bringing up some legal matters into play against the Fed chairman. Trump's statements may add scrutiny to Jerome Powell's leadership and could influence financial markets. Though no official actions have been confirmed from the government entities or the Federal Reserve, it's just what essentially sources are saying close to the situation. President Donald Trump announced on Truth Social the potential for a major lawsuit against the Federal Reserve Chair Jerome Powell. This move is linked to the increased headquarters renovation costs and rate policies and disagreements during a Jerome Powell leadership. Involved essentially are President Trump and the Fed Chairman Jerome Powell in this lawsuit. Trump is essentially contemplating legal measures over renovation expenses and monetary policy. As of now, no formal statements from the White House or the Federal Reserve confirm this lawsuit. It's just what sources are saying familiar to the situation. And it's also because of what Trump tweeted out saying on his own Truth Social platform regarding major lawsuit. The immediate effects of Trump's announcements are unclear, as no concrete policy changes or market actions have been confirmed. Markets may react essentially to these headlines, but direct impacts remain speculative given the absence of formal proceedings. Financial implications include potential scrutiny of the Federal Reserve's essentially expenditure. Political tensions between the executive branch and the Fed may intensify, possibly influencing essentially public and investor perceptions, and the Fed's independence in its operational effectiveness. I know the Fed likes to go on and essentially say that they're independent and not political, and essentially the decisions that they make is based on data, which is an absolute BS. Yes, their decision could be based on data and should be based on data. Is it fully based on data, or is it politically motivated? It's definitely politically motivated. Before Trump became president, he made it very clear that he does not like Jerome Powell, and Jerome Powell made it clear that he does not like Trump. And we know where Jerome Powell stands. It's not with the Trump administration, it's with the other party, with Pocahontas. Historically, context suggests that the presidential's critiques of the Fed policy are not new. However, a formal lawsuit against a sitting Fed chair is unprecedented in that matter. Such actions will pose legal complexities and potentially alter traditional banking essentially autonomy. Here are the quotes that were suggested regarding the post that essentially Trump made. The renovation costs are outrageous and completely unacceptable, and Jerome Powell's policies need to be addressed. Potential outcomes include shifts in rate policies or changes in future Fed transparency requirements. Without official actions, markets may see volatility driven by speculation rather than informed decisions, marking essentially and underscoring the need for clear communication strategies. Is Trump about to sue Jerome Powell? I wouldn't be surprised if he did. It is Trump. You know, he doesn't operate like a normal president of any country. Let's just be fairly honest with ourselves. He operates in the way he thinks is right, and he always wants to get what he wants. We know that for a fact. When people voted against essentially the Genius Act, one conversation with Trump, and they all voted yes. So is he going to sue him? He might do. Is he going to win? Most likely yes. Is Jerome Powell going to get replaced this way? Probably yes. Is it going to be beneficial for the crypto space? Hell yes, getting rid of Jerome Powell. Now, moving on to the core CPI data that came out, and regarding rate cuts, which is the biggest topic inside the crypto space, also relatable to Jerome Powell, on discussion of are we essentially finally going to be getting rate cuts. Now, yesterday we talked about the CPI data. We said if it comes out the way we want it to, then the crypto market will react in a positive way, where traditional finance essentially seems like it's failing, and alternative market spaces will essentially take the rankings. Well, the data came out the way we wanted to. So the latest July essentially CPI inflation data has sparked fresh debate on Wall Street. While consumer price index stayed at 2.7%, below the 2.8% forecast, core inflation unexpectedly rose to 3.1%, the highest since February 2025. The mix of a cooler overall prices, but essentially hotter underlying cost increase, is putting the September rate cut odds at 90% right now. So the chances of getting rate cuts in September has just risen to 90% due to the data that's been released now. The Federal Reserve is now caught between a slowing labor market and a sticky core high price trend, making essentially the coming month one of the most critical times for the market in years. According to the US CPI result released today, headline cost increase came essentially in a flat of 2.7% year over year, matching June's number and staying below the estimates right now. However, the US essentially core CPI news was hotter, coming in essentially, as I said, 3.1%, exceeding the 3% consensus. This marks the first time in 6 months that the core essentially price growth has breached the 3% level right now. It essentially excludes also the food and energy prices, making it essentially a key metric for the Federal Reserve's policy path right now. At a 3.1%, it now sits at 110 basis points above the Fed's 2% target. The latest CPI news data sends mixed signals everywhere right now. On one hand, price increases is steady, giving the Federal Reserve some cover to ease the rates. On the other hand, the rise essentially in core price index data suggests that inflationary pressures remain embedded. For the Fed Chairman Jerome Powell, the challenge is balancing the economic slowdown narrative with essentially the political and market push for rate cuts. As a senior essentially crypto market analyst, CoinGrabber, for example, give their own perspectives. This is the classic policy trap. cut essentially too fast and you risk reigniting essentially inflation. Wait too long and you risk a deeper situation. Market reaction was swift. CME Fed Watch now shows 90% probability of a 25 basis point cut rate essentially in September from the Fed, while polymarket predictions odds jumped from 73% to 81% of a rate cut happening. The surge in September rate cuts odds are essentially 90% and is being driven by expectations that the Fed will prioritize employment stability over temporary inflation essentially situations. But not everyone is convinced that the Fed should be cutting. Peter, for example, Peter Stifel, global strategist and chairman of essentially Sheaf Gold, argued that the 3.1% data actually understates the real cost of living. Even taken a face value, these numbers show that the need for higher, not lower interest rates, Peter said. His views essentially adds weight to the argument that official data might be masking deeper inflationary risk situations. In the crypto markets, this core CPI data versus the Fed rate cut is essentially creating a volatile setup. Policy easing generally weakening the dollar and boosting risk assets. Because Jerome Powell is still not doing rate cuts, is actually still working out in favor of the crypto space because the crypto space is being seen as an alternative market space. Jerome Powell does rate cuts, it's even better for the crypto space because we're going to go flying. Which is why Bitcoin and other cryptocurrencies often rally ahead of such policy moves. Traders are betting heavily right now on policy easings, with some projecting this could push Bitcoin to the higher end of between 144,000 and 147,000 essentially zone before a sharp correction. However, if US inflation data essentially crypto impact plays out, then a sharp post essentially Fed rally could be followed by an equally essentially sharp correction. For now, all eyes on the September essentially as both traditional and crypto essentially investors position themselves for a potential Fed pivot. In other words, everybody essentially is expecting from Wall Street to the crypto space, we're all expecting now a rate cut to happen. JP Morgan also gave their perspectives on that matter as well. JP Morgan predicts potential downside risk to the US core CPI essentially data due to tariff dynamics ahead of the key inflation data releases. Now, implications for financial markets include potentially volatility in rates and cryptocurrencies. JP Morgan's global research projects that near-term essentially tariff dynamics may increase the headline inflation, while certain components could pose downsides for risk in the US. Also, tariff-related pressures on inflation could constrain Fed policies, affecting markets like rates inside the crypto space. Macro essentially indicators like CPI are pivotal in understanding the financial market's behavior, as tariffs essentially escalate the Fed's potential interest rates and adjustments may impact economic landscapes and particularly essentially sectors exposed to tariff imports. Displacement essentially in inflation components may arise, particularly if essentially service inflations remain soft, contrasting with the headline tariffs. Experts' analysis points to potential policy constraints impacting financial strategies. Preserved global essentially economic shifts have often led to realignments in the central bank's positioning, indicating a potential continued volatility in US essentially CPI assessments. Historical trends also suggest that markets may adjust quickly to any regulatory essentially or policy changes. Bruce, for example, the head of economic research at JP Morgan Global Research, said global core inflation is projected to increase to 3.4% going forward, essentially analyzed to the second half of 2025, largely due to the tariff-related US inflation situations. So according to JP Morgan, it's because of the tariff situations that the inflation is so high. But other people have given different perspectives on the matter as well. But keeping on what JP Morgan said and going to essentially what the US Treasury is saying right now as well. The US Treasury Secretary Scott Bessent made noteworthy assessments of the Fed in his statements to Fox Business today. Bessent argued that the Fed should have cut interest rates back in June, given accurate economic data. Bessent, who stated that the Trump administration is open-minded and selecting also the Fed chairman, said they are looking for a vision for reconstructing the institution in the new presidential candidate. He stated that the current Fed faces a fundamental problem and that the 50 basis point interest essentially rate cut should be considered in a September meeting. Even though Wall Street is predicting 25 basis point rate cut, the Trump administration or Scott Bessent, just essentially in this sense, is essentially expecting a 50 basis rate cut. In the shadow essentially of these announcements, US essentially stock markets reached new records. Consumer Price Index CPI data, which came in line with expectations, reinforced expectations for a September interest rate cut. The S&P 500 index surpassed 6,400 points, with small cap stocks also saw sharp gains. While the Treasury yields declined, strong gains in artificial intelligence stocks, positive essentially earnings and figures. President Trump's renowned criticism of Fed Chairman Jerome Powell still continues. Now, even though JP Morgan's head of global research comes out and says Trump is the reason that the inflation is so high because of tariffs, well, some don't see it that way. Scott Benson sure doesn't say it that way, but you could say Scott Benson essentially works for Trump. That's why his perspective matches Trump's. But what about the other people? Stephen Mirren essentially and James Bullard both said Trump's tariffs are not causing inflation right now. Two of the leading contenders also for key seats at the Fed made it clear today that they do not believe President Donald Trump's tariffs are causing inflation, according to CNBC interviews. Two people from the Fed board essentially came forward and said, we stand with Trump, that tariffs are not essentially the reason why we have so much inflation, which is odd because according to Jerome Powell, it's the tariffs that are causing the inflation situations. But according to the people around Jerome Powell, it's not. Two of them so far have come forward and said, nope, it's not essentially tariff situation that Trump is creating, that inflation is so high. Stephen Mirren and essentially James Bullard, both speaking separately, rejected the position taken by many economists outside the White House as well, that trade duties will lead to persistent price increases. Trump has essentially nominated Mirren, the current chair of the White House Council of Economic Advisors, to finish in his final months of the term, left open essentially for Governor Andrea. Bullard, who previously essentially served as the president of St. essentially Louis's Fed, has been named in reports this week as one of the least 6 possible candidates to replace Jerome Powell when Jerome Powell's term essentially comes to an end in May 2026. Neither committed to a firm position on future rate votes, but spoke in ways that fit the president's stance on inflation and a serious threat. And if you're thinking to yourself, well, these two Fed members came forward because they want to replace Jerome Powell as the Fed chairman, and that's why they're backing Trump, they're not even on the list for people to be replacing Jerome Powell. They just wanted to come forward and tell the truth. Mirren said predictions that the tariffs would cause long-lasting price spikes have simply not materialized. He stated that there was no evidence whatsoever of any tariff-induced inflation, and pointed out that the gloomy forecasts made by some experts just haven't panned out. His comments followed the release of July's consumer price index, which showed the price of raising essentially to 2.7% year over year. That figure remains above the Fed's official 2% target, but came in slightly lower than Wall Street's expected. The report also adds to the argument from Trump's administration that current inflation numbers do not justify keeping interest rates at the current level. Trump used the CPI release to renew his criticism of Jerome Powell to push for steep rate cuts. Posting on Truth Social, he said Jerome Powell's slow decision-making has caused so much damage, and repeated his demands for the Fed to lower its benchmark rate by 3 percentage points. He also claimed that the economy's current strength has been achieved despite the central bank's action, which is facts. Trump is still making movements inside the United States. He's still bringing in contracts. He's still bringing essentially factories back to the US, even though Jerome Powell is not giving a hand. Every country, in terms of rate cuts, central banks have done rate cuts. Some countries have done 6 to 7 rate cuts right now from their central banks. Jerome Powell, still not. Bullard also dismissed the idea that tariffs are essentially raising inflation. He argued that the past 6 months of economic data since the latest tariff measures were imposed show very muted effects on overall essentially prices. In his views, any increases from tariffs are a one-time adjustment to price levels, not ongoing drivers of inflation, which is facts. Tariffs will impact the market space for 1 to 2 days max. After that, you can't blame tariffs for the whole scenario. Bullard predicted that the Fed's rate essentially setting Federal Open Market Committee will begin cutting rates in September. According to these two essentially Fed members, even according to them, September should be rate cut month. He noted that the committee has essentially paused its earlier rate cut program when the tariff issue flared up 6 months ago. Now, he said, there is enough evidence to move forward with cuts, since neither tariffs or taxes, in his view, are responsible for higher inflation. Both Mirren and Bullard also addressed the issues of essentially the Fed's independence, which has been repeatedly tested during Trump's presidency. Trump has openly criticized policymakers for not lowering rates faster, sometimes signaling out essentially Jerome Powell by name. While avoiding direct comments on Trump's tone, Mirren stressed that the central bank should operate independently of political pressures. Bullard said that Trump is entitled to his views, noting that president's background is in real estate and his focus on securing low borrowing costs. He added, good for him. He's good. Essentially, he's got views, but a lot of people have views. And if you don't want to hear that, this is possibly the wrong job. If confirmed, Miran will join the Fed's board before year end, while decisions essentially on Jerome Powell's successor will shape the central bank's leadership. Though the middle essentially of the decade, markets are watching both developments closely right now. Traders are watching, Wall Street is watching, and the crypto space is watching. Are we going to get our rate cuts finally in September? According to Fed members, yes. According to Jerome Powell, silence. Now, the next news we're going to go through on tonight's live is regarding Putin and Trump. Their big meeting is coming up this Friday, which could cause market volatility. Before we go through that, let's inside the comment section first. As I said previously, this is live as always, which means if you do have any questions or comments, put it down inside the comment section. I'm more than happy to help you out. So let's see where we're inside the comment section, and then we'll go straight into the next news, which is regarding Trump versus Putin on Friday. Good evening, Miles, the CMF, Bull XRP. Good to see you. How you doing? Hi, Miles, the CMF. How are you doing today, boss? I'm doing great. Carlos, how you doing? Hi, Miles, the CMF. George, good to see you as well. Good evening, Miles. How are you, brother? I'm doing great. Callie, good to see you as well. Hi, Miles. Which coin is good to buy for bull run sale profiting? That one, it's risky. As I said yesterday's live and on previous lives, right now we're in such a regulated market space. I wouldn't be looking for short-term gains. Instead, I'll be positioning for long-term gains. Why doesn't Jerome Powell just quit? It's a great question. Somebody should ask him. Now, crucial geopolitical impacts. Trump versus Putin on Friday this week. A meeting between two of the world's most influential leaders naturally sparks widespread speculation. Historical patterns show that the major political dialogues can directly affect traditional financial markets, including stocks, bonds, and commodities. These shifts in turn can create ripple effects that extend to the crypto space as well. Uncertainty or clarity. The outcome of such a summit can either introduce new uncertainties or provide much needed clarity on international relations. Both scenarios can trigger market movements and policy directions. Discussions might hint at future essentially policy directions concerning trade, sanctions, or even energy, all of which have the direct economic consequences. The decisions between President Trump and President Putin could have far-reaching implications for the global economic outlook. Topics such as international trade, energy prices, and regional conflicts are often on the agenda for such a high-level talk right now. Any agreements or disagreements on these fronts can influence global supply chains, commodity markets, and overall economic growth projections. Obviously, if it comes out that Russia is going to be stopping the war and essentially the whole war is going to be coming to an end, great news for the market space. We can move forward. If the sanctions get lifted from Russia, even better. Russia could essentially start supplying energy once again to the European market space and to the United Kingdom, which will lower our energy prices. So a lot of good can come from this. A more stable geopolitical environment generally fosters economic growth, which can indirectly benefit the crypto markets by encouraging broader adoption and investments. If the talks go wrong, it could still benefit the crypto market space, not the first few days because the market will be in shock, but after the first few days pass, if the news comes out bad, after the first few days, the crypto market can react also in a positive way as well onwards because it could be seen as an alternative market space. In the moment, it might go down if the news is bad between Trump and Putin. If the news comes out bad, nothing gets resolved and things even escalate, the market will be in shock, you could say. The crypto market space will also essentially carry some of that burden for a few days. After that, it actually might be seen as an alternative market space. So it could work out positive both ways. Trump and Putin come to a resolution, crypto market good. Trump and Putin don't come to a resolution, crypto markets could still play out good as well after a few days. Increased tensions or economic sanctions could dampen global growth, impacting all financial sectors, including digital assets. This essentially independency of highlights why even seemingly distant political events matter to crypto enthusiasts. Given essentially the global finance situations, it is prudent for cryptocurrency holders to consider the potential crypto market reactions to this significant meeting. While direct correlations are rare, indirect impacts, though traditional market sentiments and macroeconomic shifts are common, and here essentially are some of the few considerations. Increased volatility. Be prepared for potential price swings as traditional markets react if the news comes out bad. Flight essentially to safety. Observe if investors shift towards stablecoins or away from riskier assets. Long-term trends. Remember that the fundamental developments in crypto technology and adoption often outweigh short-term political news, which is facts. This is why I say if Trump and essentially Putin have a sit-down and it comes out bad, let's just say the news comes out bad, nothing happens, no resolution, things even escalate, the market will be in shock for a few days. After that, the crypto market will, resolve itself and move forward because we're still heading towards regulations and utility, and the market could be seen as an alternative market space. Also, it's a market space that Russia tends to use a lot. The upcoming meetings between President Trump and President Putin is a significant event in the global stage, carrying a substantial geopolitical impact. While not directly a cryptocurrency announcement, its potential to influence global economics, stability, and investor sentiments makes it highly relevant for anyone engaged in essentially digital asset space. Staying informed about these broader geopolitical developments is essential for making well-considered decisions inside the market space. Absolutely facts. But let's see what's going to be happening as we move forward. Observing how traditional essentially markets respond will offer valuable essentially insights into potential ripple effects for your digital assets. As I said, if it comes out good news, crypto market is good. If it comes out bad news, few days market will be volatile. After a few days, the market will move forward. Political news don't impact the crypto market space too much. Max it impacts it is 48 hours. After 48 hours, it moves on. Now, what we're going to be talking about next is Circle. But keep that in your calendars. Friday, Putin versus Trump. It's going to be a big deal. Circle is what we're going to talk about next. So, Circle, you could pretty much say, has come to the realization that maybe Ethereum wasn't the best chain to operate on because it's too costly. So, Circle has decided to create something new, you could say, which they've launched today. Circle's Arc Layer 1 blockchain advances stablecoin finance with enterprise focus, because we know that right now the crypto space is moving towards regulations and institutions and banks. It started with the retail section and now it's moved on to the institutions and banks. Circle is taking stablecoins beyond their current utility with Arc, an enterprise-grade Layer 1 that could finally make blockchain palatable for global finance. In their words, the network's native USDC gas model and built-in FX capabilities aims to resolve two of the institutional adoption essentially biggest roadblocks in one stroke. According to the post essentially that was released from Circle, Arc addresses three fundamental friction points that have been hindered in terms of institutional adoption: unpredictable gas costs right now, settlement latencies, and compliance limitations, which is all the things that the XRP ledger already offers to institutions. Circle is starting to introduce them. By making USDC the native gas token, just to repeat that one more time, by making USDC the native gas token, no longer ETH, the network eliminates the Treasury's management headache of maintaining volatile crypto reserves. What they're trying to talk about is ETH. Simply to facilitate the transactions, which is ETH. I don't know why essentially Circle didn't mention we're tired of using, if the simplest way to put it is Circle is trying to say we're tired of using Ethereum. It's too volatile, it's too expensive, it's too high cost, it makes no sense. Let's just make USDC the native gas token for USDC transactions, because ETH just makes no sense. But they couldn't say that, obviously, so they're now essentially coming out and saying, by making USDC the native gas token, the network eliminates the treasury management headache, which is Ethereum, of maintaining volatile crypto reserves, which is Ethereum, simply to facilitate transactions, which is Ethereum. Alongside this, Arc also built in an FX engine, provides institutional-grade currencies, conversion directly on-chain, while essentially powered by consensus and delivers sub-second finality in terms of a critical feature for payment processors and trading platforms operating at a scale. The blockchain's full integration with Circle's existing ecosystem creates a seamless pipeline for financial institutions, native support essentially for Circle Payments network, and it allows instant settlements between 100 plus connected institutions while built-in compatibility with Euro C, USYC1, and Circle's minting tools, creating an end-to-end environment for multi-currency operations. Perhaps most strictly, essentially, is ARC's opt-in privacy feature. It addresses the regulatory concerns that have kept many traditional finance players on the sidelines, allowing selective, essentially, shielding of transaction details without creating a peak, essentially, private chain. ARC's EVM compatibility represents a calculated gamble, maintaining developer familiarity with radically, essentially, rethinking the underlying economics. And per the reports that came out, essentially, regarding developers, existing Ethereum essentially tooling directly to ARC, but will now operate in an environment where gas fees remain stable in dollar terms and complex currency swaps execute natively. So USDC transactions, USDC fees, not Ethereum. This combination could provide particularly transformative for emerging asset classes like tokenized securities and commodities, where predictable essentially costs and instant settlements and essentially for institutional participation. The network's essentially architecture opens several previously impractical use cases. Cross-border payment providers could essentially leverage the integrated FX engine to offer real-time currency conversions without relying on off-chain liquidity pools. Trading platforms might build stablecoin essentially swaps with built-in settlement guarantees, while lenders could develop hybrid credit models, also combining on-chain collateral with on-chain identity verifications. And notably, ARC's design also accommodates emerging applications, self-executing financial contracts where AI agents could conduct transactions autonomously with essentially within defined perimeters. So Circle's coming out with this new feature. Basically, if you want to do USDC transactions, your gas terms is essentially your gas fees will be in USDC, no longer in volatile assets to make these transactions happen. Brilliant idea. To be fair, Ripple came up with it first long time ago, since the XRP ledger was invented. But it's nice to see Circle's catching up after 8 years or longer. But interestingly enough, Tether is not happy. Tether is criticizing right now Circle and coming out and saying this. Tether's CEO criticized Circle's new ARC blockchain on Twitter, highlighting its centralized design as a departure from decentralized crypto values. Tether's CEO is angry because Circle is becoming centralized, more centralized than remaining decentralized. This criticism of Circle's ARC highlights the ongoing tensions in crypto regarding decentralization versus institutional control, potentially affecting market dynamics and stablecoin positioning. So why would Tether be angry? Essentially, is Tether in the right for saying this to Circle? Not really, I'll be honest. Because as much as Tether wants to talk about essentially decentralization, USDT wallets get blacklisted. Does that sound like decentralization? So when Tether essentially works with some corporations around the world and some government entities around the world, they go around and blacklist wallets. Now, I'm not saying they shouldn't do that or they should do that in any sort of a way. It's not my place to tell Tether when to blacklist a wallet if the wallet is being used for illicit activities. We can't prove if it is, but Tether can blacklist wallets. So is that decentralization, Tether, or is that centralization? It's, interesting that Tether wants to throw shade on Circle's movements, but, it's a bit essentially, it's just hypocritical on that matter. Tether's CEO essentially has publicly criticized Circle's newly announced ARC blockchain, characterizing it as a centralized and permissioned platform. Circle's ARC is designed as a layer 1 blockchain with regulated and essentially settlement-focused models. The CEO of Tether, a key figure essentially, said that Circle's leadership is pretty much in shambles, and comments suggest a critical view of the potential impacts of essentially ARC's centralized design on a blockchain industry. This development occurs alongside Circle's announcements of a significant quarterly loss. Circle's formal positioning of ARC focuses on compliance and regulated settlements infrastructure, which contrasts with Tether's emphasis on maintaining a lean and profitable crypto strategy without financial middlemen. ARC targets institutional finance, which may essentially reshape industry dynamics if liquidity shifts towards essentially its structured settlements and approaches. The CEO of Tether essentially focuses on profitability and decentralized networks and offers a point of contrast. As the CEO of Tether stated, stablecoin infrastructure should be lean and profitable, focusing on open networks rather than middleware that increases centralization. Again, Tether blacklist USDT wallets. Potential outcomes include shifts in USDC settlements channels and impacts on BTC and ETH as institutional flows evolve. Historical precedents also suggest some similar compliance and centric blockchains have faced decentralization criticism, influencing their adoption and perception. Do you know why Tether is actually angry? Because Circle's reach is getting bigger day by day, while Tether's reach day by day, let's just going forward, is going to get smaller. Because they're kicked out of the EU, they're going to be kicked out of the US because they're not a US company, but they're trying to squeeze themselves through. I did say Tether is a possibility for USDT to be able to operate in the US if they pay their way through. We know that works in the US now. So if Tether does pay their way through, then that's a possibility. And you could see Tether's desperation when essentially they started mentioning on the news, when the Genius Act passed, Tether came out and said, we've spent $5 billion in the US so far, and we're going to be spending more money in the US. The Tether's just trying to come out and say, please give us the green light in the US, even though we're not a US company and we can't essentially prove our financing, but still we spent $5 billion in the US so far. Some may consider it bribe money. But let's see how that plans out. But it's interesting, Tether once again throwing shade while they're in essentially no position to be throwing shade on anyone. Former Fed President Bullard, which may be on the list, maybe not on the list, but the former essentially St. Louis Fed president is maybe going to become the Fed chairman. So there's a rumor going around that James Bullard, St. Louis, might be in a position to get a higher ranking in the Fed and even a Fed chair. No confirmation whatsoever from the White House, no confirmation whatsoever from Trump or his administration or anybody around him whatsoever. But there is rumors going around. So, former St. Louis Fed President, essentially James Bullard, discussed potential succession with Treasury leadership, expressing willingness to accept the Fed chairmanship, despite essentially unverified claims. The reports come out today. This conversion essentially highlights potential shifts in the US monetary policy, leadership, and sparking market interest, though official essentially confirmations remain absent. Bullard also reported willingness to consider the Fed's chair role has sparked interest, especially with the emphasis on low inflation targets. Discussions involving essentially approvals by the Treasury leaders suggest a significant interest in that matter regarding economic policies in turbulent times. If he is chosen as the Fed chairman, it's not a bad thing. He stands with Trump. He stands on what Trump says. He's against Jerome Powell. He's positive for the crypto space. The implications of Bullard's consideration for a role focus on the need for stable economic policies. The speculation essentially remains regarding how his leadership might influence financial markets, particularly the direction of the interest rates and potential impacts on economic growth. He said, I cannot find a primary source statement from essentially James Bullard, the US Treasury, and the St. Louis Fed, or official government portals that matches the quoted language regarding the interactions with the Treasury, essentially Secretary Scott Bessent, or any willingness to accept the Fed chairmanship under specific conditions. James Bullard is not on the list to become the Fed chairman, but he is pro-crypto, you could say. He's essentially stands with what Trump says. He wants to do rate cuts. So everything the Trump administration stands for, this man stands for. He's not on the list so far to become the Fed chairman, but it's a possibility he can be on the list because rumors are going around now, in other words. Now, what we're going to be talking about next is the SEC. Before we talk about the SEC, let's go to the comment section first. As I said previously, this is live, which means if you do have any questions or statements, put it down in the comment section. More than happy to help you out. So let's go to the comment section first before we go through the next news on Twice Live, which is relatable to the SEC's next movements. Why doesn't know we were here? Is XDC and can do big numbers than a coin like ADA or something? Is XDC better than Cardano? In the long run, I would have to say yes. But Cardano will do well in the long run as well. But XDC inside the financial sector, I think will do a lot more better in the long term. But Cardano will do as well alongside it. Good evening, Miles. Good evening, Miles and CMF. Lena, good to see you. How you doing? How you been? Good evening. Good day, Miles and CMF. Mike, good to see you, brother. How you doing? Hi, Miles. Richard, good to see you as well. How you doing? Hello, Miles and Familiar. Mickey, good to see you as well. How you doing? Hi, Miles and CMF. Peg, good to see you as well. How you doing? As soon as I put my crypto into a trust, I will be taxed on unrealized gains. It's best to leave it in my wallet and then get loan against it. That's exactly what I said. I said the exact same thing. A while ago, not financial advice at all. A while ago, I told everyone that there is certain influence. I'm not going to name them. I'm not going to name no one because, as I said, we live in a different world now where if you say someone's name or something, they tend to sue, which I don't want the headache, and I'm guessing they don't want the headache either. And we live in a very different world. In the past, it would have been face-to-face confrontations, but now it's all about legal stuff. So I'm not going to name anyone, but I did say there are certain crypto influencers telling people to open up essentially a crypto trust and put their money into a crypto trust or open up LLCs or so on. And I said that these people are going to defraud you later on because they don't know what they're doing. What they're promising people is a lot of BS. And also, it's the same scenario with the other situation where people were promoting Ripple shares when Ripple doesn't have any shares. Link2Co, essentially. People were essentially, promoting inside the crypto space for the longest time. The same way I said that is a full-on scam, this is also a full-on scam. It might not be a scam now, but it will be a scam later on because it could go two ways. Either that influencer doesn't know what he's doing and he's just babbling on BS, or he does know what he's doing and he's just going to scam a lot of people. And later on, he might be in a lot of legal disputes. So he must be a moron if he thinks that's a great idea for him to make money. But as I said previously, please be careful inside the crypto space. A lot of people are promising people to create them trusts or create them LLCs or create them some other essentially platforms that they can essentially move their crypto onto to skip on taxes. All those methods will end bad. The best method, not financial advice in any sort of a way, if you want to be in a tax-free scenario, the best method is always to borrow against your assets, use them as collateral, and you don't get taxed on debt. That's always the best method. Or moving to essentially a country that has lower taxes if you want to do that and so on. Obviously, if you don't pay back what you borrowed, then your collateral, which is your cryptocurrencies, will be taken away. So always pay back what you borrowed. And if your crypto assets go higher in price, you can borrow again, pay off the previous loan, and now stick on the newer loan. But please be careful inside the crypto space. A lot of people, some of these influencers, they're doing a lot of dodgy behavior, which I can't name them, but I can name their essentially actions. And there's someone inside the crypto space telling people to create LLCs for them and trust and so on. Don't do it. Same way I told you don't do Link2Co, it's the same reason I'm telling you don't do this. Now, crypto developments is what we'll talk about next. Hi guys, and CMF family. Is it time for facts news? Let's go, Carl. Crypto developments unleashed. Apparently, the SEC has again given another green light to the crypto space to continue essentially to move forward. Wait for regulations to use as collateral. Will you be able to stake XRP with your bank or fintech? Yes, you will. Great question, Shelly. Regarding essentially waiting for regulations to borrow against your crypto assets, it's not a bad idea. A lot of essentially jurisdictions around the world still don't have the regulations needed for that to happen. And some of those firms that are promising people essentially to borrow against your crypto assets might not work out because they don't have the proper licensing and they might be operating in gray areas, which is the worst kind. So preferably you might want to wait, obviously, for your own jurisdictions, essentially to have the correct regulations in place for that to happen and for the firms you want to borrow from so that they have the correct licensings to make that happen. Also, you might essentially, the best option would be essentially the part two of Shelly's question, which is will you be able to stake your XRP with your bank or fintech? Yes, there are certain banks essentially already operating in that field. HSBC Bank, Standard Chartered Bank are operating in the field of letting you borrow against your crypto assets. Not all crypto assets, they're starting off essentially with a few. Nexo is also a platform that does have the correct licensing, but again, it depends on your jurisdictions. If your jurisdictions cover such a scenario, always do immense amount of research before you store your crypto somewhere to borrow against it. And in my point of view, I would personally just wait for Ripple. Ripple's about to get a banking license, a banking charter license. They're also about to get a Fed account. Somewhere down the line, you could probably just store your XRP with Ripple and borrow against it, which might even be better than anywhere else. Rather than going to HSBC or Standard Chartered on, Nexo or so on, you could just go to Ripple. I'm guessing somewhere down the line, Ripple is going to offer such a service because Ripple has a custody platform, Metico. Ripple brought out Metico, then Metico partnered with HSBC and Standard Chartered Bank and Zodiac Custody to create a self-storage, institutional-grade custody service. So Ripple might actually be the best place to store your XRP for safekeepings, not financial advice in any sort of way. And I'm guessing somewhere down the line, they're going to offer that service of lending and borrowing. So I would personally wait for Ripple because I see it as the best place. They built the entire platform. They built a custody solution as well. Why not them? That's what I would do as well. But great question, Shelly, honestly. When will we have regulations? What is your opinion on staking or such a DeFi? When are we going to be having regulations? Well, we got one regulation, Genius Act inside the United States. We're about to get the Clarity Act on September 30th, apparently. And regarding essentially staking your XRP or staking in general, any crypto asset on a DeFi space, not recommended. So if you want to stake your crypto assets, first of all, consider the fact that some staking essentially platforms are not safe. Exchange staking would be the safer option. And also they do offer lower rates. And also if you lock your crypto assets in and you want to, take them out because the market has boomed and you want to sell and you can't because the staking essentially is locked in for 30 days or a year. Some people stake their assets in. I'll give you an example. When Luna, which ironically the founder of Luna today pleaded guilty on all counts of charges, if I'm not mistaken. When Luna crashed, people were staking their Luna on multiple exchanges, and people were essentially seeing their assets drop from, some people saw their portfolio drop from 10 million to 0, and they couldn't do anything. They couldn't, take out their Luna to sell because their Luna was staked. So some people actually had 10 million, 20 million, $25 million worth of Luna staked, and it was locked, staked, and they couldn't take it out in any sort of a way, and they just saw their asset go completely to 0. Not saying that's going to be happening to, XRP or XLM or XDCOH or so on, but in scenarios that you might need the money to sell, just consider the fact that if you do lock staking, it could, you're not going to be able to take it out. Also, if you want to stake, consider using Binance, Coinbase, Kraken, essentially crypto.com. These types of exchanges are the best places to stake your assets. DeFi places are not great. Some DeFi places offer tremendous, essentially, yields. I've seen DeFi places offer up to 1,000% on your crypto assets, but it's just a scam. So yes, the exchanges offer a much more lower rate. Yes, the DeFi space will be offering you some places 100% to 1,000% essentially on your assets, but it's not recommended because it's just a scam they're going to steal from you. So stick to crypto exchanges if you want to stake, and don't do locked stake. It might offer you a lower rate, but at least it's not locked, just in case you ever need the money. Now, roughly, how long do you think it will be till we can borrow off our crypto miles? I would say not that long, preferably, because once we get the Clarity Act out of the way, it will give us a much more better understanding. It will give the institutions a better understanding, and the banks and the SEC and the CFTC moving forward. So I would say after the Clarity Act, we should be seeing some sort of movements regarding lending and borrowing. There are services right now on Wall Street. There's a firm in Wall Street that's offering essentially lending and borrowing services on Bitcoin and Bitcoin ETFs to anybody in Wall Street. And as I said, Standard Chartered Bank, HSBC Bank, depending on different jurisdictions. There's a lot of places that do offer these types of services right now in different jurisdictions. But on everybody on the same essentially path, same platform and so on, it's not that far off is what I would say. Wait for Ripple. Many thanks, Miles. Yeah, definitely wait for Ripple as well. I would say 100%. Thanks, Miles. I was thinking that might be the best option. I just want to get rewards for staking it. Fair enough. Great question. Happy Pisces. Good to see you. How you're doing? Great advice to wait for Ripple. I'm in Australia, and there aren't that many ATMs that offer crypto loans that are good terms. Let's go, John. Now, again, all this financial advice in sort of a way. Crypto development unleashed. SEC chair signals a bold path forward. So apparently the SEC has given the green light that yes, they are still working on bringing innovation into the United States, but the SEC apparently is now saying continue with the innovation inside the crypto space. Don't just wait for us to keep on working on some sort of regulations or so on. So here it is. A significant statement from a prominent figure in the US financial landscape recently sent ripples through the digital asset community. US SEC Chair Hester Peirce, often dubbed the crypto mom for a supportive stance on innovation, shared a compelling perspective. The advancements of crypto development doesn't necessarily need to pause for new legislations. She's telling crypto companies, don't just pause and wait for regulations. Continue with the innovation. The regulations are coming. This viewpoint challenges the common narrative that a lack of comprehensive laws is holding back the entire sector. To be fair, she just mentioned this today. They could have mentioned it 8 years ago. Chair Peirce remarks reported by Ginseng Finance suggest that a powerful shift in the mindset. Instead of waiting for the perfect legislative frameworks to materialize, the industry can and should continue to build. This proactive approach to crypto developments highlights the potential of innovation to outpace traditional regulatory timelines. For years, the crypto industry has faced uncertainty due to the absence of tailored laws. Many believe this regulatory vacuum stifles growth, and however, Hester Peirce's statements offers a different perspective. Innovation can thrive even within its existing frameworks, she's saying. Builders should focus on creating value and utility. Existing securities laws, while imperfect, she said, provide some guidance. This outlook encourages more dynamic interaction between innovators and regulators, fostering growth rather than stagnation. Which, honestly, from where they were, Gary Gensler telling everybody to pause everything, otherwise you're going to get sued, to now Hester Peirce coming out today and saying all the blockchain companies inside the US continue going forward. We're bringing out the regulations on the sidelines while you keep on continuing going forwards. The statement from essentially the SEC chair is a powerful signal to the market. It implies that the SEC, at least through Hester Peirce's lens, acknowledges the inherent of the crypto space. This perspective could empower projects to push forward with their vision, knowing that a complete legislative overhaul isn't that's going to be holding them back in scenarios. Considering the potential benefits of this mindset for digital asset innovation, faster movements, projects can develop and deploy solutions more quickly now, knowing that even if they do operate in some sort of gray areas in the US, it's okay for the time being because regulations are still coming out. Increased investments, a clear path for development might attract more capital. Global competitiveness, the US could maintain an edge in the blockchain space. So while senators are trying to figure out votes on what to pass next for the crypto space, Hester Peirce, the SEC, is telling crypto companies, just keep on going. Just keep on building inside the US. Bring more innovation inside the blockchain space inside the US. Don't worry, the legislations are coming. However, it also places a greater nuance on projects to understand and adapt to existing rules, ensuring that the offerings align with regulatory expectations later on. Despite the optimism, the nuance of the cryptocurrency regulation remains a critical topic. Hester Peirce's stance does not negate the ongoing efforts by various governments and bodies to craft specific legislations. Instead, it offers a programmatic intermediary solution. The key takeaway is that waiting for a perfect legislative package might mean missing out on significant advancements. The industry has already demonstrated its ability to build and adapt. This continued momentum will likely inform future legislations rather than being entirely dependent on it. It's a dynamic interplay where innovation drives policy discussions and not always the other way around. Ultimately, the message is one of the resilience and determinations. The future of crypto development is solely on the hands of lawmakers, but also in the hands of innovators, entrepreneurs, and communities who continue to build and refine this transformative technology. In conclusion, the SEC chair Hester Peirce's insightful remarks underscores a vital essential truth that the rapid pace of crypto developments essentially need to be considered and constrained by legislative delays, while essentially clear cryptocurrency, the industry possesses the advanced digital asset innovation within existing frameworks. This proactive approach, coupled with common essentially to building and moving forward and not slowing down, is going to give the United States the edge it needs inside the blockchain space. This is incredible, absolutely incredible, regarding Hester Peirce coming out and saying, look, we're going to give you the green light. Blockchain companies in the US, you all have a green light. Continue innovating. We're not going to come out and sue you anymore. Just continue innovating while the legislations are being formed on the sidelines and going to be passed by the Senate and essentially signed in by Trump. This gives confidence towards the market space. It also gives confidence for institutions to enter more into the market space, knowing that gray areas don't exist anymore. Now, moving on from what the SEC said to Belarus. Belarusian central bank today drafts rules for permitting crypto payments. So another country has decided to come forward and enter the crypto space and bring in regulations. So far, we have the entire EU inside the crypto space. We have some African countries inside the crypto space. We have essentially Saudi Arabia, Kuwait, Bahrain, Qatar, and the United Arab Emirates inside the crypto space, the United States inside the crypto space, Brazil inside the crypto space, Russia obviously doing their transactions inside the crypto space, Hong Kong inside the crypto space, Singapore, Japan, Vietnam, Indonesia, India. The list just goes on now. Australia. There's so many countries right now entering the crypto space, and slowly some countries are moving at a much more snail's pace compared to others in terms of legislations. But another one just entered, Belarus. Bitcoin has just become a very important topic in Belarus, as its powerful leaders is now calling for regulations of the cryptocurrency payments. The monetary authority in Minsk is ready with essentially the necessary changes to produce breakthroughs in utilizing cryptocurrencies, including for payments under sanctions. If you're wondering, yes, Belarus is under sanctions by the United States because Russia tends to use Belarus to make payments. But obviously, Belarus's sanctions aren't as severe as they are on Russia. Roman, the chairman of the bank's essentially board, made the announcement following a meeting with Belarusian President Alexandra today, to whom he reported on the present state of the nation's banking system. The central bank's chief executive described the topic as very important, referring to the expanding essentially domestic crypto markets, currently represented mainly by exchanges registered as residents of Belarus's high-tech park. The latter is essentially a special legal regime that provides treatments to companies from various sectors in the IT sphere, including tax exemptions, is governed by a decrease of number 8 on the developments of the digital economy, which was signed essentially by the end of 2017. The document legalized crypto-related activities such as essentially mining and trading when it went into force the next spring and opened the doors of HTTP to businesses dealing with digital assets. In a statement after essentially the meeting with the Belarusian strongman, highlighted that the turnover on these platforms grows faster rather than confidently and demonstrates solid figures, remarking as cryptocurrencies are here to stay. This is why it's necessary to be very correctly and move very timely, getting ourselves integrated into the mainstream finance. He's also essentially recently appointed as the NBRB governor after serving as a prime minister of Belarus, suggested that the provisions of the presidential decrees need as an update the application of cryptocurrencies and other digital financial assets has broadened since their adoption. So, does Belarus enter in the crypto space? Does it have any sort of beneficial advancements for everybody else that's not living in Belarus? Yes. It seems like Russia is going to be using Belarus as a hub to make crypto payments. The same way China uses Hong Kong to make payments happen. The same way China is essentially launching its own CBDC in Hong Kong. Same way Chinese banks are pushing Hong Kong banks to move more towards stablecoins. So, same way Hong Kong is being used by China, Belarus is going to be used by Russia as their banking hub inside the crypto space. So that should add substantial amount of liquidity towards the crypto space as we go along. Not overnight in any sort of a way, but over time. Now, moving on to Ripple news. But before we talk about Ripple news, let's go inside the comment section first. Let's see where we're at inside the comment section, and then we go straight into the Ripple news. Let's see where we're at. We were here. I just joined. Not sure if you mentioned if the banks offer lending for our crypto. I understand they want access to our keys. That's correct. Yes. This is why I said the banks do want your keys. Obviously, they need to have access to your keys because they need your assets as collateral just in case you can't pay the loan. This is why I said it's better to wait for essentially Ripple to get their banking license and to get their Fed accounts. And then most likely Ripple somewhere down the line will offer borrowing, lending, and staking services as a blockchain bank, which to me, it seems like a viable essentially option. Ripple brought out Metico partnered with HSBC, IBM, and Standard Chartered Bank and their crypto platform Zodiac Custody to create this, very high grade self-storage wallet for institutions. So that means Ripple could definitely safeguard your XRP. 100%, I would say if you ever want to borrow against crypto assets, wait for Ripple to get all the licensings, and that will be the best place to borrow against your XRP from. Not financial advice in any sort of a way. And yes, if you do use other essentially banks, most likely they will need access to your keys because they would need your assets as collateral in case you don't pay back the money that you borrowed. Now, great question, Pisces, because it essentially clarifies what I said. So thank you for that. Is Flare safe to invest my XRP in? Is Flare safe to invest your XRP in? Look, regarding Flare, I've said in the past as well, regarding Flare, for me, it's not a must-have project. I don't see the point of it. For me, it's just not a must-have project in any sort of a way. Preferably, I wouldn't do that. If you do hold Flare, if you are somebody that holds Flare, I wish you the best, and I hope you make a lot of money for yourself. If you still haven't entered Flare, I wouldn't enter into it at all. Not financial advice at all. Miles, is it a problem if I didn't inform my country that I have a Tangent wallet where I hold my cryptos when I filed my tax returns for the year 2024? I should point that out. I am French citizen. You're okay for now. Again, not financial advice in any sort of way, but you're okay for now. And we'll leave it as that. If you want to discuss matters like that, message me directly. But you're okay for now, because the reporting part is next year, if I'm not mistaken, regarding the EU. But you're okay for now. Flare still haven't delivered on their promises. It's true. There's a reason why I say don't go towards Flare. I said that since day one. And I know also one of the developers on Flare as well, on their core team. I'm not throwing shade on them. Again, whoever holds Flare, I hope wish you the best, and I hope you make a lot of money on Flare. But it's not an asset I would go towards, especially not putting my XRP into it. Obviously, I want to make my investment work for long term and not let money be used by incompetent people. Fair enough, Carl. Hello, Mr. Tolley. How you doing? Happy Pisces. It's a bit confusing since Ripple really isn't concerned about the retail space. This is not their focus. Why are they offering future staking for us? Well, the reason why Ripple essentially will offer these types of services is it's beneficial if people don't end up paying back the money they borrow. Ripple gets more XRP in return. They get your collateral, in other words. There's a lot of benefits why Ripple might offer essentially staking services or lending services or borrowing services, might offer these services through essentially their bank later on if they do offer them. It's beneficial for them that if people don't end up paying back the money that they borrowed, Ripple gets your XRP as collateral in that sense. There's a lot of benefits why banks would do that on that sense. Now, great question again, because it clarifies that as well. Now, Ripple, on the topic of Ripple gets SEC waiver to essentially restart private fundraising, boosting XRP's growth. Ripple has received an important approval from the US SEC Exchange Commission today. On essentially paper, today, Ripple received the good news of, on paper, the case is fully ended, which we already knew that, but on paper, on the SEC's website. But another thing, essentially, SEC has just given the green light to Ripple, that a lot of people aren't talking about it and they don't know about it, is Ripple has received an important approval from the US SEC today. This approval, called a waiver, lets the company raise money privately from accredited investors. Before this, Ripple was not allowed to use a common rule called Regulation D to raise private funds because of legal case that was going on with the SEC. But the SEC just greenlighted Ripple to raise money privately again. This waiver removes that block. It lets Ripple raise money more easily without filing a lot of paperwork. The SEC gave this exemption because it believes this move will protect investors and serve the public interest. With this new approval, Ripple can raise funds to work on important projects. These include improving XRP, developing the RLUSD stablecoin, and making new partnerships worldwide. This change essentially helps the firm grow its business and bring XRP to more companies and users. Has the SEC just helped Ripple? After all the scenarios Ripple went through with the SEC because of Gary Gensler and his weaponization of going after Ripple, because most likely the same 42 banks that are trying to tell the OCC through a banking association not to give Ripple a license, and Circle, most likely essentially weaponized Gary Gensler at that time to go after Ripple because they knew it was going to be a threat. But has the SEC just helped Ripple to grow faster by the looks of it? The waiver shows a change in the SEC's approach. Instead of only essentially fighting in court, the SEC is now helping Ripple. Who thought we'll see the day where the SEC is helping Ripple to find ways to work within the rules? This is good news for the company and for the crypto market. After the news of the waiver, XRP's price went up as investors showed more confidence because the SEC is now helping Ripple. Some companies have even started using XRP more in their business plans. Ripple still faces some rules and challenges, but this exemption clears an important roadblock for Ripple. It allows the firm to raise money and keep growing without the old legal limits stopping it. The limits that the SEC, Mr. Gary Gensler, put on Ripple to stop its growth in the US, which then Ripple used that as a tool to go around the rest of the world and get every sort of license they can to get their hands on. This move also helps Ripple pursue even a broader ambition, such as obtaining essentially a banking license, which they're doing right now in the US, and creating increased adoption for RLUSD stablecoin and for XRP. Overall, the SEC waiver is a big win for Ripple. It helps the company raise funds, grow XRP, and move ahead after years of legal issues. It also shows that regulators may be ready to support crypto companies while considering investor safety. This is incredible news. Also, to add on top of that, the SEC today, on paper, officially, on their own website, stated that, the days between Ripple versus SEC ended, and the reason why essentially we're doing this and so on and so on, of why we're trying to bring clarity is because of this case. So here it is. The SEC and Ripple Labs ended, their almost 5-year dispute after both parties filed for drop their legal appeals, which everybody saw. The case's conclusion is a welcome development that ensures minds once occupied with litigation can now concentrate on creating a clear regulatory framework for crypto, said Hester Pierce. With this chapter closed, we now have an opportunity to shift our energy from the courtroom to the policy drafting table, said the SEC chairman, Paul Atkins, in response to Pierce's post. Our focus should be on building a clear regulatory framework that fosters innovation while protecting investors, which is the exact same words Brad keeps on using for the longest time. Brad's always been tweeting about this, and so has essentially the CTO of Ripple as well, regarding our focus should be building a clear regulatory essentially framework that fosters innovation while protecting investors as well. The SEC is now helping Ripple to grow, which again is JP Morgan's worst nightmare. Things aren't looking good for JP Morgan as we move along, but who cares? Because Ripple is growing, and that's all that matters. If Ripple grows, as much as people like to say it's decentralization, let's just be honest with ourselves, elements of centralization will always exist because there's no such thing as a decentralized world. However, elements of centralization will always exist. Going into a digital world, it's about the invisible prison wall. It's about the invisible prison bars that's going to be around you going into a essentially digital world. It's not about getting away with the system, because the system is going to become much more stricter. So elements of centralization will always exist. On that note, that the SEC is now helping Ripple to grow inside the United States. Well, before they were stopping their growth inside the United States, now they're helping them to grow inside the United States. On that note, we have come to the endings of this live. This was the CMF Live. This was episode 353 of the CMF Live. Episode 354 will be tomorrow at 10 p.m. London time, Monday, Friday. You can tune to this live. CMF stands for Crypto Mouse Family. My name is Miles, and tune to this live Monday, Friday. And a disclaimer of this live, as always, is not financial advice, no political advice, and whatever I say is only for entertainment purposes. So, if you enjoyed this live, drop a follow. If you enjoyed this live and you watch this for the first time ever, follow and subscribe. If you watch us on X or on YouTube, like, comment, retweet if you already haven't CMF members. Before we do go, obviously, let's go start the comment section first, just in case there's questions to be answered. Thanks, Miles. I will direct message you. Can you please explain how to do it? Yes, Carl, leave a message outside the live, and I will reply back to your comments with the Telegram link. There's been an attack on Monero, and yes, regarding Monero, on that matter, Monero has essentially been compromised, and it's no longer essentially this decentralized platform on the back end of the crypto space. It's more centralized by the looks of it also. If you want to stay off Monero, XLA would be your best bet. But as I said a long time ago, Monero will only be used on the black market. Good night, Miles and family. Great live. Many thanks for all you do. See you tomorrow. Ian, see you tomorrow. Same time as usual. Night, Miles. Great live. Great live. Thank you. Let's go, John. See you tomorrow. Same time as usual. Ian, see you tomorrow. Same time as usual. Don't you think it will take years for Ripple Bank? Do I think it will take years for Ripple Bank? No, it wouldn't take years for Ripple Bank in any sort of way, from my point of view. Not years. Nowhere near years. Night, Miles and CMF. Pablo, see you tomorrow. Same time as usual. Remember, it's a race about liquidity. If it's going to take years, the liquidity is going to dry up. Thanks, Miles. Night, everyone. See you tomorrow. Orphan, see you tomorrow, same time as usual. Pablo, see you tomorrow, same time as usual. Episode 353. Let's go. Take care, Miles and CMF. Let's go, Ray. See you tomorrow, same time as usual. Thanks, Miles. Have a great night. See you tomorrow, same time. Artistic, see you tomorrow, same time as usual. Good night, Miles. Khalid, see you tomorrow, same time as usual. Mike, see you tomorrow, same time as usual as well. Thanks, Miles. Great insights and advice, as always. Night and day, CMF. Please remember, no gaps when you're hashtagging on X, like and retweet facts. If you want to put sorry. If you want to put hashtags, outside the live, remember to leave essentially a gap between each hashtag. Also, don't leave a gap when you put a hashtag. Thank you for that, Shelly. Miles, I've just converted some ETH to XRP. Let's go, Funky. Thanks, Miles. Great live. Let's go, Comatose. Good night, Miles. Funky brother. See you tomorrow, same time as usual. See you tomorrow night, Funky. See you tomorrow, same time as usual. Love the live, Miles. Have a great night. Leaf, thank you so much for the kind words, and see you tomorrow, same time as usual. Good night, Miles and CMF. Info getting better daily. Thanks for a great live. See you tomorrow. Free forever. See you tomorrow, same time as usual. Thanks, Miles, for a great live show. Have a great night. Carl, see you tomorrow, same time as usual. LJ, night, Miles. Great live. Let's go. See you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. I'm about to say 11:25. I'll see everybody tomorrow, same time as usual, 10 p.m. London time. Like, comment, share, retweet, subscribe, follow if you already haven't. See everybody tomorrow, same time as usual, for episode 354 of the CMF Live. Love you all. See you tomorrow.